So last week, Jamie Dimon was quoted as saying it's the most dangerous time in decades. It certainly feels like one of the most unsettling and uncertain times. And there's a lot of reasons for it. I'll give a couple. I think there's two elements that are at play here from the US perspective, and it's the global chaos we're seeing around the world and the domestic dysfunction that's actually feeding the global chaos. And it's not a current issue. This goes back probably multiple administrations to the US where we've lost our way. But I think what we've seen is the Hamas attack has actually added to an already troubled world. We had the war in Ukraine, we have the South China Sea heating up. And I don't know if you've seen the near misses from both planes and ships lately that are creating some provocations between the US and China, China and the Philippines, and other actors in the South China Sea. And now, just as it looked like a deal was possibly coming together between the Saudis and Israel, you now have this Hamas attack, which is really upending a lot of the relations that were improving around there. So it's really been a very tricky time. And I think this does favor from a kind of a perverse way for distraction, both Russia and Iran. I think it puts Israel in a very difficult position in that all the instincts to go in and to provide a strong enough response that will act as a deterrent for the future is the challenge. Do they go far enough or not far enough, or how do they play this? If they don't have a strong enough response, it's not enough of a deterrent. If they have too strong a response, then it turns the risk big backlash against them. And at the same time, I think it's really important that we keep in mind that there's a battle going on, not just in the battlefields around all these trouble spots around the world, but also for the media share of mind and support. And I think the court of public opinion is actually going to play a big part in this. And as we've seen, facts don't usually matter in some of these issues, as you're saying with the debate of where the missile came from that blew up the hospital or the hospital parking lot. I think we've talked about this last week. The range of outcomes is quite wide. I do think this is a really challenging time for China. I think they're in a unusual spot in that they like to be seen as a global peacemaker and a global leader, but it's hard to do that when you're sitting on the fence saying they can see both sides of the argument. It's also a challenge for them because they're coming at this while they're dealing with the domestic economy that's struggling, and they have what I would consider fairly unreliable partners in terms of their allies. If you were picking a group of people you want to have your back, I'm not sure that you would go with the Putins and some of the other leaders, North Korea and the like. I'm not sure that's where you would go for the highest confidence. So I think China's in a very difficult spot. I think their economy and how China plays this will have a big role in determining how we move forward globally. And it wouldn't surprise me if the challenges that are being created in China actually push them to dial down the rhetoric with the US for the near term and let their economy get their footing underneath them a little bit better. I mentioned a couple of weeks ago, I think China is getting close to bottoming. I think they're doing a lot of things to stabilize their economy. I think that's a big priority for Xi right now. And I think the Hamas attack does not come at a particularly good time for President Xi. I think he would like to see things settle down a little bit. He wants enough distractions for the US to push us around a little bit and weaken us, but he doesn't want too much that it becomes they lose control of their side of the world. So I think this is a real issue, and I think the meetings coming up between the US and China will be fascinating to watch and give you some signs as to where relations are going. I think on the domestic side, our dysfunction is maybe at a record high. I saw that our two presidential candidates are now at 37% approval ratings. I think they're at around 57% of people who don't want to see them in office. And there is now growing talk of no labels candidate really coming to the fore now. And I think they're circling up a couple One discussion is that they have a bipartisan ticket, which would be quite interesting. I think the Speaker of the House debacle has not shown a great light on the U.S. and certainly not on the Republican Party in this process. It is not inspiring confidence in any way, shape, or form. And the longer it drags on, it worsens things not only domestically, but around the world. So getting this to be resolved is an important issue. But more importantly is how it gets resolved and what we come out with after. And are we going to start shifting back to more of a bipartisan approach to dealing with real big issues? And while that sounds like a crazy statement to make given the state of the world today, I think what the U.S. has been particularly good at is rallying together when things are bad. And things are bad right now from a lot of levels. Ironically, not economically, which we'll touch on in a minute. I think the issues that we're seeing in the rest of the world are attributable to the dysfunction of the U.S. and our inability to project a solid foreign policy out to the rest of the world. And that has created a void that others have stepped into. I think these are really some of the major issues that we're facing. And it's coming at a time that growth is slowing. And this was from the IMF before the attacks. And this is a 5-year medium-term forecast looking out. And as you can see, we're moving down to levels that are really challenging for the world we're in when we need to make big investments and we need to deal with big debt issues as well. So we touched on these next two slides last week, but I just want to remind people that the range of outcomes are high and the impact is very, very big for the world. So far, it seems like the markets are reacting to what they believe will be a confined war, possibly a proxy war with some spillover to Lebanon and Syria. But if we get to a direct war, all bets are off. And I think when Jamie's talking about the risks out there, he's looking at the risks of, if you're running the world's largest bank, you're looking at the ultimate risks, not the likely risks. So he's factoring in what he thinks is the potential for how bad things could get. I think I saw a note from Hamlet yesterday where he doesn't think we're at that stage yet, more likely in the confined to proxy level. I'm not sure if he's on, Mark. If he is, he can speak for himself, but that's one part of it. This is the projections from Bloomberg Economics on what it might mean for growth, the baseline before what we're looking at for next year. What you can see what the projected growth had been in the orange line for the last 5 years from 15 to 19. And then you can see the three scenarios. And clearly a direct war would be a big hit to global growth, but I think it has bigger implications. And what's interesting is we're switching gears here. This is coming at a particularly challenging time for governments, particularly in the developed world. And this is a look at the EU and the pressures they're facing from a fiscal policy perspective. And it's comparing the change from 2020 to the projected change for 2030 of what net interest cost increasing will do, what the aging of their population will do to their fiscal demands, what defense spending will do, and what the green initiatives will do. And when I saw this, I was actually taken back by how low the level of green initiatives are in terms of the spend relative to the other areas for these four large economies in Europe. And I think this is really kind of a fascinating time as we have these high demands coming at a time that the finances of these countries are not great. Their industries are under attack and they need to make massive investments. And I'll add to it that they're now expecting another wave of immigrants coming in, which has been highly divisive politically for some period of time. So I think this is a real challenge that Europe's facing, but they're not alone. The US is is forecast to run large deficits. We hit 2 trillion if you factor in the accounting for the student loan payments. Right now, they're not counted in. It's 1.7 trillion, but we're at over 2 trillion right now if you factor in the student loan payments restarting. And it's projecting out for long deficits for quite some time. So we have to get our house in order. And this is where the drama in Washington right now needs to get resolved. And we need to come up with a better story in the next election, because if Trump wins, he said he doesn't really care about debt or deficits. And if the Biden administration wins, they haven't really shown that they care about debt and deficits. So we are going to have a change, and it's likely going to be some combination of lower spending in some areas and higher taxes in others. And that's a challenge that doesn't get people elected. So this is really where we're seeing the strains coming through. And these strains already show up in what the populace thinks as well. And that's why you're seeing such low weightings and ratings for politicians. So now we're moving to the rate scenario and where are we with rates, because so much of what we've been dealing with lately and so much of the volatility that we've experienced in the last, in this year and beyond comes from the fact that people are trying to determine when rates are going to peak so that they can decide when you're going to start to have realization of more normal values if we've moved off zero interest. And we've talked about this for some time now, this shift up and the adjustment process that's been going through. I think we're now getting to a spot where people have come around to the higher for longer. And what you're seeing after the sharp spike up in rates that we had over the last, from really June of 22 to June of this year, you saw in the advanced economies a big move up. Now you're getting to a leveling. And I think the shift that's going on right now is the adjustment to the fact that it's not working on a spike basis, but you're getting to a really, you've climbed a mountain and then you've gotten to a plateau. And we're going to be at that plateau for some time, barring a major blow up in the global economy, like a full-blown war. So I think this is one of the real tricky issues that we're adjusting to as investors in this plateauing of rates. And the expectation was that it would be a spike up and a drop down in rates. And what we're hearing is that it's not good. That's not really the case. And I think there's a couple reasons for it. And I'll just talk about the US right now, because I heard Powell speak last week, and he talked about really his dilemma. And he's getting a lot of criticism, including from people like Mohamed El-Erian, for not being clear on what the expectations are for the Fed. And I think the Fed's been quite clear on it, and people just haven't liked the message. But the message is not only from the Fed, but Christine Lagarde said this back at the Jackson Hole. They're not sure where the natural rate is. So where should Fed funds or the European rate be set so that you're not overstimulating the economy and you're providing enough support for the economy? Where is neutral rate going to be? And because of all the puts and takes, they just don't know. So we've written about this and we've talked about this in the past. We call it the accelerator and the brake economy. The accelerator was zero interest rates and quantitative easing that was put in around the developed world. It then was fueled by the Inflation Reduction Act, the CHIPS and Science Act in the US, the National Defense Authorization Act, and then it's added to with the onshoring and FDI. And one of the Powell's dilemmas is he sees the problems that are growing in the economy, and at the same time, he sees that we have a very strong economy with very low unemployment, and that creates a dilemma for him because he's trying to balance the two out. The other element that he's trying to deal with is the fact that the brakes that he's been putting on for the last 15 months are real and they're starting to take hold, but they work with a lag effect. That's Fed funds going up, that's mortgage rates, it's bank lending, it's these issues that I've listed here. And just let me show you what they look like. This is before all the last round of stimulus that the Biden administration put in. But look at what we saw from the US alone. You're looking at $6 trillion or 29% of GDP was put in a 15-month period, and that's still working through the system. And then we added another $4 trillion last year that through the CHIPS Act, through the Inflation Reduction Act, and the ones that I just mentioned, that were coming in not at zero interest rates, but when interest rates are moving up to 5%. So this is part of the challenge that he has. We're adding fuel to the fire at a time he's trying to calm the fire down. So this is part of the challenge that we're seeing around the world is we have an overstimulated economy that is creating the problem. And that's why he's had to push rates up as aggressively as he had. So now rates are where they are. I don't think the market should focus on 5% rates or whether we move up a half a point or a quarter point or move down a half a point or a quarter point. What they really should be focusing on is the other tightening that's going on. You're seeing that with mortgages. This is the highest rates for mortgages since November 2000. We're approaching close to 8% on some. And you can see on the bottom, mortgage applications are dropping like a rock. So you're seeing the challenges around that. We're seeing tightening coming in other areas, whether it's SLUs or student loan repayments restarting. Corporate finances are not in a great spot for a lot of companies that are starting to get to where they have to refinance their debt over the next couple of years. And the street's starting to wake up to the fact that you're going from, zero interest rates or 2 or 3% interest rates up to 4 or 5% higher interest rates that people are going to have to absorb. And if you're not growing at the right rates, you're on the wrong side of that trade with the banks, and you go into the private markets. And we know the rates you're getting in private credit now are not these types of rates. So they can be crippling for companies, and it's going to impact earnings. And we're starting to see earnings really see the divide that we talked about, inequality in earnings coming. So where would you invest today in what we consider one of the most dangerous times for a while? I would say whether it's dangerous or not doesn't matter to me as much as are there opportunities and how do you play them? So where we would invest today is we think about countries first and think about countries that will benefit. Really positive demographics you need. They're not found in a lot of places around the world, but you have to have the ability to invest in the transitions that are required, whether it's the energy transition, whether it's the transition that demographics are making the population older, and that's changing the spending patterns, it's changing the strains on governments for support and the like. You need reliable access to energy, as we're finding out all around the world. If you don't control your energy supplies, you're beholden to somebody else and you're vulnerable. That's a national security issue. You need corporate champions. And it's one of the fascinating things what happened with China is they really had some great corporate champions that they have now weakened, and now they're starting to build up again. But they're not going to be the same as they were previously. And you need tech leadership. And you need to be driving it, not just from having tech companies, but you need to have a mindset of entrepreneurialism and innovation that's going to drive not just the tech sector, but all sectors, because that's going to be fundamental. We've liked the sectors for some time around that are going to benefit from where capital is flowing. That would be healthcare. It's still tech. I just want to go back to these are all combined, but there's a great piece in the FT today, and they're talking about how the big 7 stocks have impacted the U.S. economy. But when you look at how they've affected the global indices, the numbers are pretty staggering. The U.S. dominates the global market. If you look at now the U.S. companies' percentage of the MSCI All Country World Index, we now account for 61% of the index. That's how the impact of the U.S. is today. Non-U.S. stocks are trading at a historic discount. They're at a 30% discount to the S&P versus their historical levels. But you are seeing rising concentration in the index as well. The global index is now, the top 10 stocks are 18% of the index. In 2010, they were 8% of the index. Really interesting article. I think it has big implications for how we're investing, but it does speak to what the big companies are doing when they're allowed to really grow and what their impact is around the world. I think there's some big implications for that we can touch on later. But I think what you're seeing now is a world that technology is becoming infused into all the industries, and those that can absorb it best will succeed best. And we see the U.S. being one of the primary beneficiaries of that. Obviously, there are other economies. I like China. I think they're at a bottoming stage now, and I think they're doing a lot of good things. I think they have a lot of problems that have to still work through. We like the industrial complex, whether it's in defense, where we're probably, we have a weighting in defense that's equal to the entire, what the S&P would be for industrials. And in addition to that, we like a lot of the other industrials that are going to benefit from the reshoring that's going on. Energy still has to be a big part of it. And as we're realizing again that this transition is going to be more painful, more difficult, more costly than we thought. And you want to own the materials that are essential to making these transitions happen. On a company basis, it really comes down to who can make the investments and who's growing at a rate that allows them to get past it. And one of the points that I'll make about value, and this gets the areas to avoid, extremely low PE companies have earned them, and they're going to have a hard time getting growth because a lot of those guys are heavily indebted and they're not in a spot where they can really move forward effectively. And a lot of the high PE stocks are dealing with the digestion of multiples coming down. And if they're not maintaining their growth rates, they're in a bad spot too. So they're not going to be able to get the support from the street if they're not growing at the same rates as they were. They get hits there. And we've seen that this year with the volatility of earnings misses or disappointments on both the high PE and the low PE stocks. I'd also say that bonds still represent high vulnerability. We're staying short. I just want to share two other charts and I'll wrap up quickly. The first is fiscal spending, and from the acts that we've talked about, the legislative acts are going to continue throughout the rest of this decade. And you can just see what the shift has been in spending in manufacturing from these multi-year periods, in energy and industry, and then in retail. And you're starting to see clean energy investments coming through in a much bigger way. But this is not just clean energy, it's all the industrial investments that are going on are really an important part of it. And it's done because of a lot of the fiscal acts that we've put forward. And then I want to just touch on bonds for a minute, because we've had a big change in the bond market last year. But when you see this chart and think about the risk that people took in bonds that was unintended last year from the rate spike, when the Fed was telling you and central banks were telling you they were going to be raising rates, you're not getting the returns on fixed income that you thought you were going to get. You had a big opportunity for shorts that some people took advantage of. Famously, Bill Ackman did. Now he's closed that off because he thinks the risks have kind of become different. But I think bonds are a really difficult investment. If you want to stay short, be short. If you're going long, be ready to hold for maturity. And the losses have been bigger than this. This is really the annualized returns for the broader bond index. But if you were buying some of the 30-year bonds or some of those 100-year bonds that people were blessed with the opportunity to buy, the losses are massive. And we could still see, as much as people are thinking rates are biased down, there is a risk that we see a bias of rates up again, and you can still lose a lot of money. And just think, in the last 6 months, we've had almost an 80 basis point move up in rates, which is equivalent to about a 7% decline in the 10-year and about a 16% decline or 15% decline in the 30-year bond. So there is risk still in the bond market today, and it's not the safest, as safe as investment as a lot of people had thought it had been previously. So I just think this is an area that's fraught with some challenges as well. So Mark covered a lot of stuff. We're not negative. We do see opportunities. There are risks and fragilities in the system that I think are real, and a lot of uncertainty. And I think you want to play the uncertainty by going into those areas that you can see more certainty and capital flows moving there. So I'm going to stop there, Mark, and open it up.
Thank you, Stephen. So covered a lot of ground. Questions, comments?
Stephen, you put up the stimulus table. Last year, the Eurozone, this is just 2021. So huge amount of subsidies for energy last winter, things of that nature, supposedly expired. Where is the Eurozone going to stand in a year forward? You talked about U.S. Fiscal policy. What about Eurozone?
I think Europe has multiple problems. One is, as the stresses get greater on their individual, on their country economies, and now you're adding to it the strains from the war in Ukraine that are stressing their finances out already. And then you're going to add to that what I think is going to be another migration flow into it that's going to create even more social unrest, more political unrest. I think it's going to have a couple impacts. I think Europe has to decide, again, what the future is going to be for the European project. Can they get their fiscal and monetary policies aligned or not? And then how do they counter the military and industrial stimulus programs that the US and China are putting in very aggressively? And how do they find the funds to do that when they're already stressed financially? So I think Europe has a real issue. I think there are pockets of opportunity that, Mark, we've talked about on these calls, where there are some really great innovations going on that will create great investment opportunities, but they won't necessarily move the needle in the near term for the European economy. And I think that's one of the things that you have to separate out is individual opportunities can come from anywhere in the world, but where the capital flows are going to go and what economies are going to do well will be very different from what the opportunities that exist inside there. So I think Europe has unique dynamics that are really working against them. They're seeing massive outflows. One of their best customers, China, is uncertain whether they want their industry or not, and how that's going to play out. And then they have to decide one, and then add to it their energy problem and the energy crisis that they have for an industrial company. If you're very energy dependent, why would you stay there? Why wouldn't you go to lower cost energy places, more secure energy, more stable energy? And they can set up in the US and still get the benefits from our stimulus programs that they're not offered there. So I think Europe has a real issue, and I think they're at their limits for what they can spend, but I think more so they're at their limits for what will be tolerated by the populace. And I think that's really the problem. They have real political issues, and I think you're going to see some fascinating elections coming. And I just saw in one of the nations, a candidate came out that is I guess in Germany, that's kind of like a half far left and half far right in their policies, that may disrupt the existing party structure and put somebody else in power that could really weaken them. So I think this is a fascinating time for what's going on in Europe. And it's so complex, I'm not sure how it's going to play out.
Switzerland as well.
Yep.
Although, again, I'm still happy that Poland moved in a different direction.
And Steve, a quick follow-up on the other chart with the bonds, I saw two interesting things. One is that S&P 500 companies are so lowly indebted with long duration that their interest rate costs not going to affect earnings at all. Russell 2000 not as good. So we're seeing these sort of, real estate sector in trouble, but profits not necessarily being affected, and tied to that. And I want your comment on.
I don't know if that's so true. Do you have data to?
Yeah, I can send the chart. Sure.
I have another chart that I have to go back and check to make sure we're comparing apples to apples. But yeah. I think you're right now. I think their maturities are too short. And I think the street's going to look through the short-term maturities on their debt and say, what happens next? And I think that's the problem for anyone who's, we think of debt differently for governments and for companies than we do for our own households, but it's really the same, right? If your income's not growing fast enough to cover your debt servicing costs, you're going to fall behind. And that's what's happening to a lot of these companies. And I think what you're going to find is there's going to be a reset. People should have taken advantage of lower rates and didn't. By extending maturities, they kept them too short. I think that's going to bite them. And I think there are a number of companies that it is going to bite them. And one of the things that screws this up is when you think about the cash and the balance sheets of the FANGs is so positive relative to the rest of the market that creates distortions as well in the overall numbers. You really have to go down and look at the companies, and the companies will be very divergent in how they're going to manage through their debt. And by the way, the US blew it completely. And for all the criticism of Trump, one of the things he did say was we should be extending maturities on the debt. And then we didn't do it while he was president, and we haven't done it since. But we're too short a maturity for the rate environment. We could have lengthened maturities at lower rates, and now we're going to lengthen them at higher rates. And it's going to happen around the world.
Stephen, when the balance sheet was 4.5 trillion, we did extend the maturities. Then over less than 2 years, went from 4.5 to 9, and that's where all the short-term debt was issued. We were extending it until the pandemic, so it's kind of half and half.
Yeah.
Stephen, question, Jason Ma. One of the top risks all the time, especially in our current turbulent, ever-changing world, is always government risks, right? Government uncertainty. And when my friend Dan Aniello, who's one of the Carlyle co-founders, when he spoke, and he mentioned that is like the top line item in 3-4 line items in terms of risks all the time, right? So for example, I mean, we all know at the B20 summit within a G20, and the elephant in the room is the Middle Kingdom, and people don't even have to say that. If you mentioned at first that it might be a good time to invest in China, technically speaking, maybe, but what if some regulations are going to change pretty quickly, as we have witnessed in various ways? So there's, I mean, it's a very complicated part of the overall equation. What's your perspective on the geopolitical, on the regulatory side?
Yeah, I think, and this is my personal feeling. I think that China is now at a spot economically, and that they're starting to think, did they go too far? And he's accomplished a lot of what he wanted to accomplish by going too far. He really took out if you think about it, President Xi really changed the power structure of their leading corporations to much more state control. But China's told you where to invest for a long time. They give you their strategically vital industries, that you don't want to compete with them. If you want to invest in China, invest with the government there, or you go to the places that the government doesn't care about. So I'm pretty sure they don't care, and not a knock on Starbucks or Nike, but I'm pretty sure they don't really care if Starbucks or Nike open up another 10 stores to sell a lot more sneakers or coffees. They do care if they're losing control of things like chips and other things that are important to their industry, airlines, the defense industry, all those things. So I think they've defined where to invest. Then you have to make the decision, is that an area you want to take for the risk that you might not be able to get your capital out at any point in time? But from a pure investment perspective, I think it's the second largest economy. They have massive resources. They have real problems, but so does every other economy. So I think people are so negative on it right now that I think there will be opportunities there. I think the venture area there is actually pretty interesting too. I think you just have to worry if it becomes too big a concern for the government, does the government get involved or not? So I think you have to play it around the way they're telling you to play it. But it's a contrarian view, so a lot of people disagree with that because they're so negative on China.
True. I agree with what you said. At the same time, it's not only China, okay? You also have the US government side.
Oh, yeah.
So regulations could come both ways, either way, or hybrid.
I agree. And both have had a lot of bad policies that lead to that. And we've had not great leadership from either one. So you're right. You do have to factor the US. But I think the US has also told you where you can't, where they would be concerned. And it's the same areas. It's security and energy are really the big issues that they're worried about in tech transfer, right? Which get to security and energy. And so I think if you avoid the areas that they're concerned about, you can invest there and do well, because it is a big economy. And I think that's what people are losing sight of, is with all the negative, can you make money here?
Yeah, I think
a fair point about getting it out.
I think the upcoming presidential election is going to be quite pivotal. And then it's also refreshing to see a bipartisan set of 10 senators in Israel recently. That was good to see.
Yeah, we need more. The problems are big. You can't be solved with one party's views in the US, that's for sure.
Right.
We've proven that.
Well,
thank you.
You're welcome.
I don't know why I keep thinking of, I used to work for Bob Dole. But then, of course, Bob Dole allowed him to be sort of Trumpified at the end. But we need that. We need them having beers together again.
Yeah, they need to talk and work together. The problems are too big. The ideology
spend less money.
I'm sorry, Duncan.
They got to spend less money.
Yes.
I mean, they can't. That's why I actually think this blow up in the House is good. I mean, it's the first time. It's all about the process of how they spend money. And they probably need to both. They probably need more tax revenue, and they got to spend less money. I mean, it's.
But
It's
it
not
would
simply
be
spend less money. It's spend money more efficiently. Government is one of the least efficient sectors.
Well, that's true. I mean, they spend $86 billion a year on the Department of Education. And, you know, the education is pretty clearly done on a local level, right? So, I mean, not to get political about it, but there's a lot of stuff like that. And we're going to spend 100 billion a year on interest, or maybe 130. And I'll throw something else out there. I'm just curious on your thoughts on this. You know, Trump was a huge, his world of business he was a huge user of the debt markets. And I sort of think he came in and he said, shit, I can borrow money at 1%. Let's borrow money and give it to people. I actually am not sure he's going to be such a spendaholic when he comes in and the cost of money is a lot higher. I just wonder if that, especially with what's going on with the Republicans, right? I mean, they're on a mission there to spend less, right? So might be a very good thing going on here to put some discipline into, as ugly as it is, right? This is finally bringing this spending issue into focus for people.
Yeah, the problem is that they really can't cut a lot of costs in the spend. To Michael's point, they can be a lot more efficient, but it'll be virtually impossible for the two parties to take costs out. I think the only thing that help is that they slow the increase, not reduce the cost.
Well, they should be pushing Social Security out. Not that anybody likes that, but you know,
without question. But nobody's going to touch the third rail. Trump has come out and said that the entitlement programs he won't touch.
Yeah.
So, you know, they're not going to go to those areas with the guys we have running. So, but you're right, Duncan. I do think it's important that the debate is there. I think it comes at a terrible time for the geopolitical situation because we're leaving people hanging that are counting on us. So,
Other comments, questions?
As an augment to what you said, Mark, and all you guys, I think when you say that both sides need to have beer more often together, that is so spot on, and it's difficult to do. It's human relationships, and then working together more effectively. And Duncan, you're absolutely right. It's so inefficient and all that. And that's why astute GovTech in various sectors and categories is actually very, very exciting. Not quite GovTech, but like what Hamlet is doing, you know, investing in innovative, necessary defense tech. That's very, very exciting. And AI and other technologies that'll slowly but get rid of some of the inefficiencies. That's very exciting. Of course, the deep state is going to be a bit. It's going to take a bit more time. There's so much entrenched power in there. And, you know, kind of reminds me a little bit about the local situation in San Francisco, where the homeless industrial complex and what I call the legalized corruption, $14 billion in SF alone, is so misallocated. It kind of really angers a lot of people as locals, right? So on a more macro, greater basis in Washington, there's actually a lot of opportunities to improve on a human capital standpoint in processes, in just kind of in heart, minds, and souls, and our might. Imagine if we have collectively, you know, the vast majority of Americans are actually around the center, around moderates, right? Imagine if we synergize more and more together. It's easy to say, hard to do, but the vast majority of Americans are moderates. If we work together more effectively, America is completely unstoppable, right? Then we're going to have decades and decades of new growth ahead. So in a way, I'm optimistic, very concerned, but also optimistic. There's a lot of opportunities ahead of us. And as leaders, if we could motivate and inspire in our own small ways, public, private sectors, locally, regionally, nationally, globally, go for it, you know? So I'm done. Thank you.
I heard a interesting piece, Mark, today. I just want to share with you from Andy LaPerriere, Cornerstone Macro, who does really good U.S. policy work. And he talked about the debate in the U.S. and particularly about the Republican Party. And he said, it's not so much conservative versus moderate as it is the industrialists versus the institutionalists versus the arsonists, the team players versus the self-promoters, and those willing to compromise versus those who have always wanted to show they're fighters. In today's politics, a rhino isn't somebody who breaks from conservative orthodoxy. It's somebody who doesn't support Trump and his smash mouth form of politics. And I thought that really summed up a lot of what I think Duncan was saying and others, that we have to get back to the middle. And I think that's really where Bob Dole would have been, Mark, from what he would like to see change.
Yeah. Maybe we have to do a 361 event in DC. We'll bring all the Republicans and Dems together and we'll play pickleball.
As long as there's a boxing match for entertainment.
It's funny.
No,
We did that at Deutsche Bank, and completely different when they come together in a room like that. As you know, Mark, they are friends. They are they don't give you the party lines. They don't use the talking points, and they give you the honest their honest assessments of it. Then they blame everyone else for it not getting done.
Plus, as you know, and I don't know, it's a lot of things are done at the levels below.
Yep.
I wonder how much beer drinking there's a lot in my day. I can guarantee you that.
Mark,
you know,
that's actually not a bad idea. Folk, kind of think about DC, plan something for DC over time.
Yeah, no, we've often done it at Gibson Dunn's offices, but we've always do it in the morning and then we go up to Baltimore, Radnor, and go home. But maybe we should do something. Is Bill on here? Bill Deichler? So Bill, maybe we should do like an afternoon or like a lunch in Virginia and do an evening in DC.
We could do that. It's close enough proximity, for that. Yeah, I mean, have like a session in Northern Virginia, right across the river, and then find a nice place for dinner down in the district. Could be pretty
I
cool.
don't know. I mean, let's purposely have people. I don't want to have like the far left and the far right, but at least the moderates get together. And
That's a vast majority, man.
Yeah.
but they're not the ones
True.
that put their time and effort into it, right? The Havana Club's a good place there in New York City that shows that people from both sides of the aisle can come together and have drinks and cigars, right?
Cool.
You see it all the time there, but
But
parties get so much captured by the activists that are at the far left and far right that really control positioning, and
Yes.
it's a really tough, because people on a very far right and a very far left see each other as existential threats to the future of America.
Right. They are the most vocal, they are the activists and all that, but that's where the puck is at right now. The puck where maybe we could be stimulants on driving where the puck will be in the future. Right?
I agree, Jason. It's just a matter of time and effort, because the activists put in a ton of time and effort to polarize, right?
Yeah, the moderates are on average, weighted average is a little bit too silent. So
Yeah, we're busy living our lives, building businesses and families and communities, right? And so I don't mean to sound pessimistic. I'm actually quite optimistic on your thesis, but I think it's going to take some sort of crisis, and maybe this thing in the Middle East is, a catalyst for that. But typically the U.S. comes together when there's a crisis.
Yeah, Adam, I know you have a question. I just need to know, because we didn't get. We didn't put our calendar invite out for Thursday lunch. Is anybody here able to make lunch on Thursday? I just agreed with 3 people to go. Is it anybody in New York that can make it in? No New Yorkers? Duncan, are you around?
It's possible. I'm sort of juggling a couple things right now. I'm in next week. The week after, I'll be in.
Okay, well, it's not a bad thing to do a small event, small lunch. And the other is if anybody's in New Jersey, let me know. We have a great group coming. Go ahead, Adam.
Stephen, quick question, and only one. Independent presidential candidate tickets haven't been very successful in the US. How realistic is this no labels
It
candidates?
depends is the answer. They're running out of time to get into the races. You have to get, I don't know the actual full procedures, but I think their clock's running out for them to get into the races so that they could be considered a candidate, although I'm not sure how it works on the national election for independent party. So I don't know how much time they have, but they also have to figure out getting grassroots support it's a major issue to start a party. What it usually does is, and they were talking about this today with Kennedy, I saw a statistic that said Kennedy going into running as a third party candidate would take 14, he's polling at 14 percentage points. That would come off of Trump, most of them. And then there's a progressive candidate that would take 4 points off of Biden. So they do matter from that more than they matter from can they get in and win. Although I do think right now with the polling of the existing guys, a third party candidate will get a better look. I just don't know the timing for them. I know new candidates coming in to the Republican election, for example, are almost out of time. Same with the Democrats. If somebody wanted to run against Biden, they don't have much more time to get into the primaries.
Mhm.
So I think clock's running. I don't know on the national side.
Okay, thank you.
RFK Jr. is interesting.
I'm sorry.
RFK Jr. The votes is going to pull.
Well, I would have thought it would have been interesting, but now he's gone independent.
Yeah, exactly.
Questions of what do you, who gains from that?
The absence, just the absence of leadership in the United States for the past 20 years, quite frankly, has been appalling. And we're still in that position.
What
And we keep reelecting him.
what coincided with that? Could it have been a social media rise factor?
I think it's the multiple wars. It started with the multiple wars. It's really, we started having divisiveness with the Tea Party movement, but what really started to see things start to blow up was really the going after all the wars. We spent $6 trillion.
But that didn't happen 20 years ago. We lost journalism. That was our fourth rail.
Yeah, I would agree with that one.
I'm just,
Good
war's
observation,
war.
Mark.
And we went into an echo chamber and we lost the fourth rail.
Mark, you think that that's tied to the concentration of power being 4 or 5 global corporations running 90% of the mainstream media?
Yeah, and some kind of play on human behavior that we had maybe that wasn't even, I don't even know if they fully understood the power of that as it came out, but they understood it as it evolved.
We're seeing a lot of that being played out right now with the Gaza conflict and how disinformation is being thrown out there and
Yeah. And even though
picking up stuff without verifying it. Any of these platforms,
without verifying it, but even
on it,
we used to
incredible. And I'm seeing it also on the Russian Milblog channels. I follow them, and the Gaza stuff that they're putting on there is just.
Well, this is U.S. against Arab, U.S. and Israel against all the Arabs. That's the narrative. I listen to them too. I don't think anybody listens to multiple channels like you and I do. You and I listen to podcasts and everything else, but
it even goes beyond social media. I mean, the New York Times issued a really remarkable statement about the hospital bombing in Gaza and the coverage over it. So, it's not only a social media driven phenomena, I think it's also an ideological driven phenomena at the major media outlets to become polarized.
Right.
New York Times, Washington Post, Fox News.
When the New York Times
That narrative is created by these media platforms. And that polarization is created there. The power that these platforms have is extraordinary. They're equivalent to a nation state.
It is. Mark, this ties into New York City, November 29th, Impact, Next Gen, etc. I call it overall, when you step back and look at the big picture, right? I call it so many people are unintentionally or subconsciously living under the devil's lies. The most historical biblical sin is really deception, right? When Eve ate an apple from the serpent. So you see that happening manifested directly, indirectly in many, many ways here. So one symptom, for example, some of you know that I sent a lot of kids to Ivy League, Stanford, MIT, Berkeley, right? That's a whole part of what I do in my family business, grooming next gen leaders. But one of the things I don't like, and for those students that I could influence, right, is that I'm going to coach, mentor, guide you not to be highly intellectual sissies, right? I want you to be pragmatic and become problem solvers. And there are so many highly intellectual sissies out there that are so deceived by professors. And these professors are very, very powerful. In Harvard, right? Harvard's got the lowest ranking in terms of being open right now. If you look at the one research results, right, ranked 200 something in top tier university, that's a symptom. I came from UC Berkeley. I grew up in San Francisco, went to UC Berkeley, and I grew up very, very liberal, right? But today I'm totally centered, totally moderate, but very open-minded socially. But everything else is like moderate and conservative fiscally, especially defense, etc. And that is something that we all, as parents, grandparents, as leading gens here, we have to really play a part in making sure our kids and the next gens are not going to become, are not being deceived, right? In a family, in a community, K-12, in higher education, around the work, in the peers. And
perceived or bullied, right? There's
being bullied, right? And you see this protest, all they care about is pro-Palestinians. My heart goes to the children who's getting taken out in Gaza.
Oh,
at the same
I
time,
heard a really interesting story.
They don't talk about a terrorist.
Someone who was in Berlin, they had a 4-hour dinner, and they're Jewish, and their friends are, one's a journalist, and one is an interpreter for the chancellor. And their 3 children were at a pro-Palestine rally, and they had a very, calm intellectual discussion at dinner. They disagreed, and then the 3 kids came home, and they basically had a conversation, and they didn't really. Now, again, I can play counterpoint. We used to have those kind of shows on TV, but the 3 children apparently had their first sentence, and they couldn't go beyond their first sentence. About they didn't know history.
Right.
They didn't know the dynamics involved. Now, on the other side, and thank you to this community for helping us with a 360 view, or pointing out, Gaza, we should have known this was going to happen, right? This was just this was a matter of time. And I mean, that was awful. I mean, that was horrific and all those things. And I get it. But could this be a wake-up call? No, it's actually a call for more anti-Semitism. And now, to Stephen's point, this is the most dangerous time in decades, for all the factors that we've been talking about.
Yeah, that's true, Mark. It seems to be a call for more division as opposed to what is the root cause here? What is the problem?
Yeah, well, it's so easy to rally in your silos now.
Yeah. When you don't offer a good vision for young people, they're going to gravitate to something and hold on to it, regardless of what it is. So,
exactly,
when you don't have really good outlook and you see it plastered on TV every day and all the negativity, no wonder these kids are acting out the way they do. They have no full comprehension of what they're doing.
I would add to that
when they get the epiphany of, oh my gosh, I really don't want this later on in life, it's a little too late.
Sorry to interrupt. We also have to consider algorithms writing a lot of the news for Facebook and Google.
Well,
Absolutely.
now you talked about corporate America or corporate media. Now throw on, the hacking nations and even non-nation states. I mean, it's like a recipe for.
And don't forget, there's a lot of players that don't want peace, that did not want Saudi Arabia talking to Israel and
Oh yeah,
into
they
it.
played their hand really well.
Absolutely.
And now I'm seeing, as of last night, I asked this last week, what if we see Iran linkages? Now they seem to be appearing. What do you do? What do you do with that?
Absolutely.
That the Iran involvement is more of a reaction as opposed to proactive. Iran's going to have its own problems internally, similar to what Russia is having in terms of do these young Iranians really want to go to war?
I would like to believe you.
But Adam, Hamas
You-
has
and
been
you see
fed by
these
Iran for
protests.
years.
You see
I do
these
believe you to an extent. I just don't know how it will play out.
There is a lot of civil unrest going on in Iran itself.
Yeah, there's so much. Information overload
That
on-
Hamlet's posting on LinkedIn. I mean, quite a bit of unrest there.
Those are more symptoms. You have to, when it comes to Iran, the regime, you look at their actual ideology, what they value, what the principles are, and a conflict to Judaism, etc. It's sort of like the far left and far right in America in a different form. So it's kind of like you look at China. Listen, it's an open secret to so many around the world is that the current head of the state, look at his resume. His resume doesn't have anything massively tangible. What's tangible is Taiwan, right? I'm sort of saying it in a manner.
No, it's a crescendo of revenge. He built that over time, and that's his mindset, and that's his governing style.
Right. And look at Iran, their main objective is, economics is important, sustenance, but what's ideal to the top people there is that they want to take out Israel, no matter what. It's sort of like I'm of Chinese descent, right? I'm a British, Hong Kong, Chinese American immigrant, and I could read multicultures pretty deeply. And one thing that the Chinese and Iranians and in many people around the world is that they don't want to lose face, right? Their face, it's much deeper than just ka-ching. So once they feel disrespected in their own ways, they're gonna just, no matter what, I'm gonna take you down. That's what's happening right now with Iran. So you are seeing direct, you're seeing proxies.
You know what I wish had happened, Jason? As I was telling somebody, I played soccer on Sunday. And this guy sort of charged me. And no, we were shoulder to shoulder and he went down. So he was mad. Then you just see it. My teammate passes the ball 5 yards and this guy's barreling for me. So I dodge. I give him a little nudge as I dodge. We both got yellow cards. Fine. I didn't need to give him an extra nudge. The number of names he called me as we're walking off the field. But then at the end of the game, a hug. Apologies from a guy that just, he came up with names I'd never heard.
Right. That's one reason that I like about what you said. Washington have, try to, if we could motivate, inspire them to have more beers together, right, both sides, and kind of give them a respect, especially the male gene, the way we work, especially for males, you might be surprised, actually have a slightly higher need for significance, and respect is the most important thing. So, I mean, it's a bit more complicated than that when it comes to politics, but at the end of the day, it's really the respect, that relationship, but of course, a lot of pragmatics along the way. I am
By the way,
Yeah.
all the males need this this thing. We're not alone, but we have way too many males here on this call. I mean, that's another thing we have to.
The female should speak up a little more here, the female leaders, right?
Well, but I don't feel bad that they don't speak up. I feel bad that they're a minority.
I think Michael's patiently waiting for his question.
He is that you're going to round us out, Michael. Give us the wisdom.
Oh, boy. This goes back to Stephen's last comment, which was a while ago about,
Sorry.
not being able to stop the spending because of various circumstances, et cetera, et cetera. And the comment I wanted to make is you don't get to play the hand you want. You have to play the hand you get, right? And I don't see anybody in DC really playing the hand that we've been dealt, right? And that's a large part of the problem.
That's a good point.
Have you invited anybody from No Labels to be at one of your meetings? Mark,
Sorry, Jeff.
have you invited anyone from No Labels to be at your meetings?
I don't. No, I've never gone out. Should I? I don't know much about
I
them.
think maybe because actually I dabbled a little bit in that way back. I think it must have been 12 or 15 years ago when they first got going. Just went off somewhere else. But a lot of what you guys are saying kind of falls into what they're all talking about.
Okay. Does anyone else have a view on this? Because I don't know them. Yes, no, maybe.
What do you want to get?
Sorry. I think you should have them come and talk.
I don't know anyone there, but I was at a dinner with, and somebody brought up the fact that they thought the No Labels group was really a group started and backed by the far right. And that kind of reaction from two of the original founders who were at the dinner, who said that's not the case. It was really designed to be bipartisan and move the country forward. But that actually led to an argument. And so it was actually it spoke to the turmoil we have in politics today is they can't even agree on something as simple as what the group was started for. So it just
all these parties that whatever they were started for, they don't represent what they were started for. Let's put that. That's a fact.
Yep.
I'd be more interested. I'd be more interested in hearing Mitt Romney speak if you could get him.
I was just watching him. Yeah, I think he's talking third party, yada yada.
Yeah, he just wrote the book, Mark, and he was on Sunday night. And what comes out of it is that whether it's Romney or not, is that what people are saying in private is not what they're willing to say in public. And that's I guess the social media television discourse that's separating this whole conversation from, get the guys in a bar, but then so what if they won't actually do anything?
Yeah,
that's a big part of politics in general, Andrew, and I agree with you entirely. It seems that the politicians' path, if you look at the statistics on freshman politicians, they go in generally roughly median earners, but within 2 years, they're all millionaires. So their business, what they're there to do. And they've, both of them have been corrupted in that regard. And I think we do need a third party. I just don't think we need a third party that's sole purpose is to undercut the other party. And that seems to be what this No Label is more aligned at, in my opinion. I kind of agree with Stephen there, but jury's out. We need more than 3 parties. We need 5 parties. And so I'm all for Bernie running. I think that would be a good pulpit.